a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Tesla and EV ETFs. So Tesla stocks are rising for the 12th consecutive day today, and the company has added about $200 billion in its market capitalization over the past 12 days, and shares are actually up over 100% now year to date. So let's take a look at what's going on with Tesla. So last week, Tesla signed a deal with GM that will allow GM customers to use 12,000 of Tesla's superchargers starting next year. And this follows a similar agreement with Ford last month. Now, with GM and Ford joining Tesla's charging network, Tesla's charging network, which is technology which is known as the North American Charging Standard, that will become the industry standard. That will most likely become the industry standard, and Tesla has invested a lot in its charging network, which includes more than 20,000 superchargers in about 1,800 locations. Now, Piper Sandler analysts estimate that Tesla may make as much as $3 billion annually from charging other manufacturers' EVs by 2030. And additionally, Tesla will also get shares of billions of dollars assigned by the government to build out a national EV charging network. Now, apart from all this, last week, all of Tesla's Model 3 sedans became eligible for full tax credit under the revised criteria set by the US Treasury Department. Earlier, only certain versions were eligible. Now, last but not the least, Twitter got a new CEO. So earlier investors, particularly Tesla investors, were worried that Musk is spending a lot of time on Twitter, and he was the CEO too. So now with a new CEO, Musk may focus more on Tesla. So that is another reason why stocks went up. Now, let's take a look at EV space. So the Inflation Reduction Act and the Infrastructure Act, Investment and Jobs Act, these both aim to boost EV development and adoption, and they have assigned billions of dollars in funding, and Tesla will get a lot of share from those federal dollars. Now, as far as EV adoption is concerned, it is rising rapidly, but it is rising from a small base. So EV sales represent just about 7% of car sales in the US and about 14% globally in 2022. And that is set to increase to 18% this year. And the International Energy Agency, IEA, expects that the sales of EVs, which was about 10 million in 2022 globally, that will grow to about 14 million. That's a surge of about 35%, 14 million globally this year. Now, let's take a look at ETFs, three popular EV ETFs that are benefiting from this Tesla surge. So this is the most popular product in this space, DRIV, D-R-I-V by GlobalX. And this holds companies involved in autonomous and EV space, has 875 million in assets, and has an expense ratio of 68 basis points. So now the three ETFs that we are discussing, the most popular ETF in this space, they follow a slightly different methodology in defining the space. And so they have different exposures, and that has resulted in difference of performance too. So that is why I wanted to show you their exposure and holdings. So let's go to the code page on Zacks.com. You can read our research report, articles, and using the link, you can go to Global X web page for this ETF and to see what it aims to do. So it involves in companies that are involved in development of autonomous vehicles and EVs, and it provides access to the entire value chain, including companies producing lithium batteries and other EV materials, etc. So you will see NVIDIA is now the top holding because NVIDIA provides chips for those cars. Tesla is the second largest holding, and then Apple. So that explains the performance of the ETF that you will see in a bit. Now, looking at the country breakdown, you will see that about 57% to the US, and then Japan and Canada. The second ETF that I'm highlighting is by iShares. The ticker is IDRV. So this holds self-driving and EV companies, and slightly cheaper, 47 basis points, and slightly smaller too, with 421 million in assets. Again, let's see what this ETF holds. So if you look at the holdings, you will see a lot of international holdings too, but Tesla is there, and Volkswagen, Samsung, other companies, etc. Looking at the exposure, slightly lower exposure to US, and then China has about 18% exposure, and we all know that Chinese stocks haven't done very well this year, whereas US stocks have continued to outperform. Now, the third that I'm highlighting is by CraneShares. Now, this has the largest exposure to Chinese EVs. So you will see the difference in the performance in a bit. So this also holds EVs and future mobility companies, 70 basis points expense ratio, smallest of the three, 176 million in assets. And let's go to the quote page, and using the link, you can go to CraneShares webpage for the ETF. Panasonic, Tesla, Nidec, Samsung, these are the top holdings, but you will see this ETF has a lot of international exposure, particularly to China, and that is why it has underperformed. So on the next slide, I have the comparative performance, and due to the methodology and exposure, the Global X product is up about 26% year to date. The iShares product is up about 15%. CraneShares product has actually underperformed the S&P 500 index and is up over about 8% year to date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I will see you next week.